Hello, my name is Ivan, aka Armenia. I'm a professional trader with more than 10 years of experience. I'm a main trader in VTF trading, where we share our trades in crypto, stock, and Forex market. If you want to join our community, you can find link below the description. Before we start, please hit subscribe button, set notifications on, and like this video. Today we're gonna talk about imbalance, or like fair value gap, and efficiency. This is the fifth block of our recurse. Now, let's talk about it. Imbalance or fair value gap, like inefficiency, is a range in price delivery where only one side of the market offers liquidity when the other side is offered inefficiency. A lack of liquidity is usually displayed on lower time frames in the same price range. An algorithm that ensures the efficient operation of the market will seek to fill the imbalance and trade the range in which it was formed. This is a magnet for the price. Imbalance is determined by three close candles, three range between the shadows of the first and third candles in the area where the price was unevenly offered to buyers and sellers. If you don't understand, just by reading the text, I will show everything on the chart, don't worry about it. Types: bullish imbalance, buy on liquidity offered; bearish imbalance, sell on liquidity offered; volume fair value gap; and just gap. Imbalance can be used as an independent tool for entering position. The combination of imbalance with other instrument, order block, breaker block, mitigation block, will give a greater chance of working out your trades. In most cases, price fills 50 or 100% of the imbalance before reversing. Less often, price gets a reaction at the start of an imbalance, like 25%. In this case, most likely this fair value gap will get reaction again. With the help of lower time frames, you can clarify the area of inefficient pricing within the imbalance of the high time frame. The imbalance will be fully filled when the price tests the high of the first candle for a bullish fair value gap or the low of the first candle for a bearish fair value gap. Keep in mind that on different instruments, gaps, like inefficiency, will be filled different. I will show you this on examples. Like on gold, it can be filled just by touch, so 25% or so. Same on indexes, etc., etc. So you have to learn different instruments, different markets, and each instrument will have its specifics. Pay attention to the imbalance that forms after the activation of stop losses and the start of movement in the opposite direction. Before falling, a partial of complete filling of the bearish imbalance is expected. Before price keeps going up, a return to the partial of complete filling of the bullish imbalance is expected. Breakdown of the internal or swing structure is significant additional factor for the considering long positions. Just examples of volume fair value gap. As you can see, this is have the shadows between candles, and this played out and we went down. Also, this is gap on stock market, on Oracle. Such gaps you can find on Bitcoin ETFs when we're opening with gaps on new week or a new day. We can find it on the stock market, of course. This is most common for stock market, like on indexes, on the new week, for example. Sometimes on currencies. So it's very important, and usually such gaps get filled very fast, but it always gets filled. This is inefficiency, where from we see on like two sides, we didn't have we didn't offer liquidity. For example, here, like from bearish side, this is from bullish side, and as you can see, this inefficiency was tested and also taking liquidity. Try to combine like a few tools like together, and you will have like great results, such as like structure, fair value gaps, liquidity, and the most important, time. Time in trading is probably the most important tool that you have to learn. It's nothing that I can teach you or like tell you like what exactly. It's just like consistency in repeating the same stuff over and over again. This is again this combination between like gap, fair value gap, and volume imbalance. And like one more picture. This is like played out perfectly. It went like down, and I had a nice trade here. This is the volume fair value gap, and that's it. Let's check real time. This is the light. As you can see, we had this 4-hour imbalance, but as you can notice, it didn't have like almost like any reaction. It was completely ignored. Why this happened? This happened because you have to understand what and when fair value gap get reaction. How to understand it? You have to identify what is this? Is this premium or discount market? You have to learn concept. What time is this as well? So here I have an extremely bearish like pattern. I will be talking about it later in the next video. And this happened in the global premium market. So all this in happening in global. So our final target will be this gap that we had on like earnings. But as you can see, we can check our local premium discount. But as local premium discount, this was in premium market. But next fair value gap will be in discount market. So probably we'll have reaction to fulfill this imbalance, and our next target will be this gap. Let's check on Apple. This is like was our play. This is like daily fair value gap, and this was weekly fair value gap. We played out this pump till this daily gap, and then we open position on we open short position on Apple. Why it's played out perfectly? Why this imbalance didn't play like this one? As I mentioned, because this happened in premium market. We've been looking for short position, and we were looking it in premium market. This happened in premium market. That's it. That's simple. Always try to find combination between fair value gap and order blocks, mitigation block. It will play out perfectly. As you can see, we have this imbalance and this order block, and price played out perfectly. This one and this imbalance. I'm marking it on a daily time frame, but if I go like on a 4-hour time frame, if I go lower, I can make it more accurate. But you just have to understand the idea. I have to understand the gist of it. Just try to combine imbalances, gaps, like with order blocks, with mitigations block like breaker blocks, and it will pay well.